Hello and welcome to Explain the Charts, where we break down complex market data into easily digestible information for traders of all skill levels. Today, February 13th, 2025, we're tackling the AUDUSD pair, focusing on how current events shape the price action. Recent news indicates easing trade tensions and a patient approach from the Federal Reserve, which has generally been bullish for the AUDUSD pair. However, other factors, such as the potential for trade war escalations and anticipated Reserve Bank of Australia decisions, introduce a bearish element of uncertainty. Let's now switch to the one-day chart to get a macro perspective of the AUDUSD price movements. The daily candles show a recent period of consolidation around the 0.65 level, following a period of volatility in prior weeks. If we look closer at the daily candles, we can observe the price action consolidating after several days of steady trading. This consolidation indicates a potential pause before a significant breakout, either upwards or downwards. Key support levels can be identified by analyzing previous lows in the recent consolidation range and resistance levels by analyzing previous highs. The volume data on the daily chart shows higher volume during periods of greater price volatility, which may indicate strong conviction. Now, let's zoom in on the one-hour chart to observe the finer details of the price action in the recent consolidation phase. On the hourly chart, we can spot several instances where support and resistance levels have been clearly defined by previous lows and highs. We notice that each hourly candle's volume is generally lower during this consolidation. This decrease in volume can mean the consolidation's strength. These observations suggest uncertainty about the next price direction. Observing the wicks on the hourly candles reveals significant buying or selling pressure at various key price levels. It is important to note that the hourly chart shows a trend of lower highs, which may signal a short-term bearish trend. For a truly granular level, let's move to the 15-minute chart and analyze the very recent price action. The 15-minute candles reveal a series of small, incremental price changes, with relatively low volume on each candle. This indicates that the current market environment is more likely to be driven by short-term factors rather than large-scale investment strategies. The short-term trends on this 15-minute chart are less pronounced, and thus less suitable for short-term trading. By comparing the different timeframes, we see a clearer picture of the AUDUSD dynamics. Overall, the market appears to be somewhat sideways, with potential volatility. The current consolidation phase suggests a need to monitor these key price levels for possible future price breakouts. The current uncertainty and conflicting news calls for a cautious trading approach. Short-term trading might be risky due to the uncertain direction. Long-term traders might want to accumulate holdings at low levels in anticipation of a positive market turn. In summary, the AUDUSD pair is currently in a state of consolidation around 0.65. Support levels appear around 0.645 and resistance levels around 0.655. A strong break above 0.655 could signal the start of an upward trend. However, it will rely on more positive news. A decisive break below 0.645 could push the price downward, and it will rely on increased trade tensions. Monitoring the volume and wick formation on the 1-hour and 15-minute charts will also be key. The release of economic indicators and any significant news events will also be important to watch. Remember that this is just an analysis and future predictions are always uncertain. Always exercise risk management and trade safely. Thank you for watching Explain the Charts.